All right. Good morning, everybody. So we're getting a little bit of a reprieve this morning. Green on the screen mostly. Um, a little bit of a relief bounce more than any real bullish sentiment. One of the main things on the docket today is some Bitcoin. We have the SEC Gensler is going to be testifying on Bitcoin. They don't exactly have it nailed down on the time frame, somewhere around 10 o'clock. And the bond sell-off has kind of stabilized a little bit. It seems to be helping things, but none of this ties into a bullish backdrop. And it's like I was saying earlier in the week, a lot of this is just unwinding what the market had priced in. Last week, when the Fed said they didn't see a recession in at least 2 years, the market heard we're not going to cut rates for at least 2 years. And they had already started pricing in cuts on the belief that things were going to start to get squeezed from this really fast interest rate regime that they've gone through, this historic escalation in rates. And the assumption was that was going to break something relatively quickly and that the Fed would have to cut. So when the Fed came out last week and said things are just so strong that it really doesn't look like there's a recession anywhere close in the forecast and at least 2 years out, the market had to unwind those cuts that it had already priced in. And that's where a lot of this sell-off is coming from. So it's not like, it's not like everybody just suddenly bared up and took the market short. They're just unwinding positions and repositioning. It's always rates, right? It always comes back to the same thing. And the Fed really didn't say anything that they hadn't already been saying. They just keep saying the same thing over and over until the market believes it. So Hong Kong is up this morning after being down for nearly a week, maybe a little longer than that. We can see this consistent sell-off since February when it peaked, right? And it's just been steady, consistent to the downside. One up day doesn't really translate all that much, but if we're watching those China ADRs, then this would be a day for maybe the BABA, Baidu, PDD, JD, those kind of constituents. Behind that, we've got the NASDAQ and then the S&P, the Russell, and then the Dow. All of those at least 0.25%, not quite at 0.5%. Japan just barely flat on the day, and the UK down, but not down more than 0.25. So flat to modestly higher. And again, it's not even a bullish sentiment out there. It's just a little bit of a stabilization. Market logic 101, right? We don't move in a straight line. The markets will pull back, bounce on support, rally into resistance before rolling over and continuing to fall. Durable good orders today with durable goods minus transportation, not overly exciting. Those are the big picture things on the docket today. If we kind of scroll over to FX Street, we can see tonight we've got foreign bond investment coming out of Japan. This is worth keeping your eye on right there. I know they don't have it ranked as very high, but any news right now about Japan and China, it's worth at least reading the headline if not actually clicking in and reading what's going on, right? There's so much about this new leadership in Japan, and it's just such a big unknown, right? You do want to continue to keep your eyes on headline news about this government shutdown that's looming. There's been a lot of discussion about how we've crossed this threshold, and the interest on our debt, our US debt, is of course, massive. And as interest rates rise, then it's putting more of a burden there, and that more of our GDP is going just to pay the interest. And it's getting worse and worse and worse, right? It's exponentially getting worse. Think of the compounding effect, right? Either way, getting the government funded is one of the biggest bricks in the wall of worry right now. So news on that in either direction is very likely to send us higher or lower. So if they get something done, or if they put a tentative agreement or a time frame together to get it done before this weekend, markets are very likely going to shoot to the upside. And if any statements come out saying that they don't see a path to getting it done before the weekend, then it's very likely that we're going to leg down. We do have crude oil inventories today at 10:30. So if you are looking for a potential scalping opportunity, USO at 10:30. And steel can sometimes move in that same thing. So something like X steel doesn't always, but they are tied together closer than you'd think. Now, the durable goods is worth keeping your eye on today. It doesn't have a high impact rating, but it is one of the things on the table. It's just easier to avoid it than anything else, right? So no reason to get run over where you don't need to. $8:30, 10, 10:30, 11:30, and 1 o'clock for the 5-year note. It's not too bad. These additional auctions at 11:30 and 1 o'clock can be game changers, so they're absolutely worth keeping your eye on. Just watch the clock, right? It's one of the best tools you have as a day trader. All right, so we tagged a voodoo line or a cog line, 43.11 and 43.07. Got a nice little reversal. We've been trying to work our way back up. If we were to just mark the intraday zone of yesterday, 50% of that would be the halfback. We managed to get through that and came all the way up to hit the daily pivot point, but we weren't able to get through that pivot point, not yet. So this halfback measure is only for the RTH session. But what we want to do is measure the entire thing from the highest point to its lowest point. And you can see we haven't even made it to the halfback yet. That would be 43.43. Volume is within normal range. In fact, it's a little light today compared to what it was Monday and Tuesday, but it's still well within normal range. So we wouldn't get too hung up on that. And there is a weekly gap close that we got really close to hitting yesterday. Really close to hitting, but we didn't hit it. So You know, a lot of times when it comes to technical analysis, so we consider close is close enough, but not when it comes to a gap close. This gap is not closed. So there's just no other way to get around it. It's not closed. And it's kind of surprising that we got that close to it and we didn't close it. We do have the 10 and the 20 now over our head to deal with, and we still have the 50 below us at 42.60. If we were to measure some of these ranges and these larger candles, they all kind of land right around that 42.60. So it is a significant level of support. Pre-COVID, one of the things that we used to do is we would time new entries into any kind of trend trading strategy where you buy low, sell high at 5 and 7% pullbacks. These 5 to 7% pullbacks, they look rough, they scare newer traders. Everybody starts loading up to go short. It just doesn't know any better. But these were fantastic buying opportunities. That was the way the game was played pre-COVID, right? Where you could just consistently buy the dip, and that the bigger dips that you were looking for were those 5% pullbacks, those 7% pullbacks. Well, we're there, right? We got our 7% pullback. If we're trying to stabilize and get back into a normal market again, which has taken, a couple of years, and we're still trying to shake loose all the effects of that COVID. It's still in the options. If you weren't trading before COVID, you might not have noticed the difference. But for those options traders who are around pre-COVID, just take a look at a SPY option and you'll be able to easily still recognize the effects, right? They say that volatility is down, but those options are still showing those higher prices. Got a long ways to go. But if this is going to be our kind of getting back to normal, then we'll actually be looking for this to be the low. Maybe we can wick through, dance around a little bit more. And if we overshoot, we could get to that 42.60, which would put us at around 8%. And there's no reason to think, that we couldn't do that. It would still be a part of the buy low, sell high trend regime, right? As opposed to momentum traders that buy high, sell higher, which is what we do after we're done with these 7% pullbacks. So it's worth noting how far we've come back and why it matters, right? Ten-day, 30-minute volume profile with TPO on the right. I know that blue volume profile over here looks like a volume profile, but it's really not a volume profile. It's a TPO profile. TPO is time, price, opportunity. It's volume by time instead of volume by price. When you put the two together, you can try to gauge when or if we spent a significant amount of time at a certain location and whether or not we hit an iceberg or a ceiling. So for an example, this volume here, we didn't spend a matching amount of time there. All right, so when price fell that day and it got to that spot, it hit an iceberg. It didn't stop it, it just kept on going. But we can see there was a significant amount of volume resting there. That's a level you're going to want to keep track of when and if we do begin working our way back up through there. When we're at the highs, we expect to go to the lows. When we're at the lows, we expect to go to the highs. We have a very large amount of volume to deal with around the 43.80 area. But if we can get through 4,400, we do have that nice shallow zone back up to the point of control. That point of control at this point still doesn't look like it's going to be moving down to us anytime soon. We would have to spend many more days down here to build this volume out before it's enough to bring that volume profile point of control down. Yesterday gave us a VPOC underneath us. So now we are completely surrounded. The one that we carried forward yesterday, we actually didn't need to carry it forward. It was hit in the after hours between Monday and Tuesday, but I left it on there just in case we went back to it. I wanted to see any sort of reaction through the day. We didn't get back to it, and it no longer belongs there. But we still have 4405, and now we've got 4313, which is really close to the cog line 4311. We don't really have a lot here to work with, other than there is a considerable amount of resistance through our own Globex this morning and through yesterday at that 4332, another cog line, right? 32s and 11s are the cog line. And there's certainly a lot there. So it's going to be a difficult fight to get through this area. The good thing is once we do get through it, and we will eventually, then that'll be a significant support area. But right now it's just a lot of resistance. After the moves we made, you know, it's a fair question to ask, have we moved too far, too fast, and are we due a bounce? We're 2% below the 10-week moving average, and we've certainly been farther than that before. Last year we got down to 7 and 8% below the 10-week. So only being down 2% below the 10-week, it's not a really crazy negative number. Even earlier this year in March, we got down to minus 3%. I do think, though, if we were to span this out a couple of more years, maybe just get past COVID and where things got really extreme, that a lot of these dips below the 10-week, they're usually turning around somewhere about 2.5%. So I'd say, we're pretty close to a spot where we would expect price to quit falling. Doesn't necessarily have to rise, but not falling would give the 10-week time to come to us, right? So it's not like we have to go to the 10, it can come to us. Taking the same consideration on a daily, we're 1.7% below the 10-day. We were less than that. We got below, say, nearly 2.5, but we started to come back up again. These tend to work in waves, although it's hard to see the wave with it choppy and nasty, which is kind of what that blue line is trying to work on in there. So if we are part of this wave and we're working our way back up, then we would expect to get closer and closer to that 10, either because we move back to the 10 or we quit falling and the 10 comes to us. It doesn't really matter which, and sometimes it's both. We move towards it a little bit and it moves towards us a little bit, and it kind of accomplishes the same thing. 4311 is a cog line I've mentioned we hit 43.11 yesterday, which also is that anchored volume. See, this is like it's like a VWAP, but it's an anchored VWAP, right? Anchored from the first of the year. We've been there and through it earlier in the year, back in March, January, March, we were kind of cutting through there. So at this point, we're looking for a weekly close to stay above that level. If you look at the range for the week, this sell-off so far has been really clean and orderly, controlled. There's not a lot of fear out there at this point. Doesn't even seem drastic or extreme. We're well within the boundaries of the weekly expected move, so it's not like panic in the streets. And this is really worth noting. This is the volume on the ES. And we had that big down day yesterday. But our volume really didn't increase all that much. Sure, it was bigger than the day before. But Mondays are, usually kind of light on the volume anyways. But that's not overly significant. Oh, dang, wow volume. We can see back in March, for an example, when we were selling off, how volume really picked up. We're nowhere near those levels. So, just kind of temper the enthusiasm for getting heavily bared up. And we've still got this issue with US dollar Japan. It's getting closer and closer to the point where Bank of Japan is likely to intervene. Now, when they do that on their own, they don't really have the same impact as when they have global coordinated intervention. And at this point, we don't know, if it's just going to be in-house or if they really are going to get help from around the world. Considering the fact that, they've got all the time in the world to plan this out, I think they're going to get help, but we just don't know. But we can see that we're inching closer to that spot every day. They're starting to post more in the media and give more sound bites about they're watching this really close and they're ready to intervene. Like, they're shaking the cage and making the noise and making it clear that they're going to do something. And they're doing that so that they don't catch too many people by surprise. They don't want to blow up accounts. But it's coming, right? Looking at their 10-year, we were above 0.75 yesterday, and they said they won't tolerate this above 1. But they've also intervened here, before it got close to their other levels. So when we popped through 50 back here, they intervened and knocked it down. Now we're taking another run at it. It's one more reason that I believe that I don't think they're going to act alone when they act here. The trade that goes with this that I've been talking about is when US dollar Japan does hit that 1.5 and they do, or 1.152 and they do intervene, this FXY market is an inverse product. So when US dollar Japan goes down, this is going to go up. That'll be a really nice trade. I don't necessarily want to sit in this thing waiting around, but we've got a defined low, just like we've got a defined high on US dollar Japan. This is an LRE, right? So a low risk entry, getting in as close to that low as possible is kind of the idea. And the play would be at least half of this distance, if not the full distance, all the way back up. It's a 10-point move, 62 to 72, or a 5-point move for half of that, right? From 62 to 67. I like it. This is one I've already started building out a position in it, mostly using common stock because I didn't want to get the options yet. They're not that good. So I didn't really want to sit in these poor options. But when it comes to the calls, you are much better buying calls when we're still going down. You'll get a better price. And you'll get that initial change when they flip and markets start going up. I was not trading in 2008. I started trading in June of 2018, so I'm really new in the grand scheme of things. That often surprises people when they hear that, but yeah, no, I don't have a couple of decades under my belt. What? Looking at things that are down, we've got precious metals, which makes sense with US dollar Japan moving to the upside. And that's it. We don't have anything else that meets our 0.5% benchmark. But looking at things that are up this morning, pot stocks are leading the way. Behind that, nat gas and Bitcoin. Bitcoin does have news today too, so kind of keep that in mind. USO, which has the petroleum report today at 10:30. More energy behind that with XLE and uranium and energy exploration, semiconductors, bonds, and then tech. Emerging markets, which ties back in with the whole KWEB idea or the idea that China is going up a little bit this morning, and then nothing else that meets our benchmark. Getting close is the Qs and the SPY up, not quite 0.5%, but getting there. The changes that come when a market is in a recession are kind of the difference between those boring household names and the glamorous, sexy monster of tech kind of names. So if you're looking for a way to research it or to dig deeper into it, look at growth versus value. Keep in mind with these pot stocks, a lot of it is still the discussion of the short squeeze. These pot stocks, were heavily shorted names. And when that news came out, all those firms that were short needed to cover. Time to cover is still pretty significant in a lot of these. So, it makes sense that there's going to continue to see buying in here. But there's a difference between buy to cover and buying because you want it, right? One's just closing a position and the other one is opening up a position. Uranium has been on a tear this year. I mean, it's just been, fantastic. And as overextended it and crazy as it looks, there's still a discussion that it's not done yet, right? This is always a harder market for people to deal with because they're looking for a pullback to get in, and a high momentum move like this doesn't pull back to let you in. And then when it does finally pull back, it usually signifies that the momentum move is done and that we're going to transition back into a trend where we get the reasonably decent pullbacks for an entry, another leg up, pullback, another entry. So it does look like the significant momentum is done. The fact that we even had that much momentum in a boring space like uranium says a lot about it. And I was talking to somebody the other day who kind of broadened my perception on uranium. There's a lot going on in that space. This isn't the forum for it, but if you haven't been digging into uranium yet and you're thinking about trading it, look around a little bit. I think you're going to be surprised, but you will also start to understand why this space is taking off as much as it is, and it's not done. Doesn't really matter too much on the day-to-day. If we look at uranium here, it's not getting a significant amount of flows. Some of these are nothing more than a data point, so we need more, right? It's up a little bit this morning. It's not very much. We can start by getting halfway through yesterday, or at least halfway through Monday, which is the bigger candle, before we do anything else. Energy, on the other hand, we got a really nice breakout after that red to green yesterday. So think about how we closed Monday around mid candle, opened Tuesday, gapped down out of the zone and completely outside of Monday's range. So outside of last week's range too, and then rallied all the way back up to close higher than Monday. Or excuse me, we went higher than Monday, but closed back inside. Not much of a pullback. Now this morning we're gapped up in that continuation. That's a heck of a reversal there, right? Red to green is a pretty decent trade strategy anyways, but with this kind of follow through, it's certainly worth taking a look at energy, which was supposed to be fading back off again. Yeah, I've been building slowly because I didn't know as much about it back then, and I've been building the position, but also building my knowledge on it. As I have to say, I wasn't as well informed in that space as I am now, and I understand a heck of a lot more about it, which I guess is just part of the whole trading experience, right? The more you learn about the companies, the easier it is to understand why they're making moves. This move in XLE, we're still trapped inside of September 21st. So we got to get outside of that zone. 50% mark at this point is kind of worthless. We've crossed through that zone so many times that it doesn't have any value left to it. So at this point, we just need to get above 91. Then we can start working our way back up to the top. It's not going to be an easy run. This thing is just a choppy, violent mess. But hard to deny, especially when we tie it in with USO. Just remember, XLE is an ETF and it's got a lot of different things in it. It's not just one kind of energy. And that move in bonds, I would approach this with caution. They were trying to push this on people earlier in the year. Oh, buy bonds. You should buy bonds. Bonds are fantastic. That didn't last, but they were out, like used car salesmen. or ambulance chasers. I don't know. So this minor bounce, hey, yeah, it's got a lot of work to do if you're thinking about, running bonds for a longer term position. I would say not yet. NVIDIA didn't fall yesterday as much as its peers, and semis this morning are up marginally. We're still stuck in this zone where IX10 from the 21st. So we got a lot of work to do if we're going to get out of this thing. Take a look at NVIDIA from yesterday. Think about how bad it was out there, say in something like SPY. So it held up pretty good. Whether we're going to get any kind of follow through or not, we'll see. So far, we got a nice little gap up. It's not looking that bad. For the Bitcoin proxies, things like Riot, we're getting an inside day breakout here, or we're at least attempting to. Or Mara is another one. Not up as much, still needs to break outside of yesterday's range, but it's working in the right direction. Not looking that bad. That'd be a nice red to green from yesterday, right? But all of this is just more of a relief bounce, right? Just looking for an opportunity to get a long play. We're not talking about running things back up. And not enough flows there. Hut and Hive, two others in the same space. So these are the names that I have for pot stocks. CGC, ACB, Tilray. I mean, they're up pretty good this morning. The ACB, not as bad. When I look at CGC, it just seems a little untenable. It's up 5% this morning. Penny stock, less than $1. That $1 area has been an area of selling over the last few days. Every time we get into that $1 zone, they just sell it off. So hard to tell if that big seller is still there until we pass through it. We don't know. Tilray up 2% this morning. It's not bad, certainly better. The 50% mark is the thing to be concerned with at this point. $2.51. But it does leave room to move too, right? So we got some of these others that aren't even picking up yet. And for crypto, SOS is up the most, but Mara, even names like Square are connected to crypto. TSM, NVIDIA, AMD. All of these names came out of that Smalls Exchange crypto futures product, right? It's kind of like an ETF. So I just opened it up, took the names out of it, and I built my crypto list from that. So, you know, some of these names didn't quite make sense to me, but they were in the list. So I added them to the list. All right, this dollar at 6.5%, this is a really big deal. Something's got to give, right? We keep coming back to that. But the 10-year did pull back. So, you know, we've got that at least. But just like we were talking about yesterday morning, it needs to pull back more. And what happened as we got, you know, around 8:15, the market opens for the dollar and bonds around that time, and up it went. So it needs to keep this fade back, get below 4.5. Needs to, I mean, it's got a lot of work to do to get back down. Not going up would be the first, just the very first piece, but it's more than that. It also needs to go down without moving too fast. We don't want wild, crazy swings and big moves. We got a decent lift in bonds, but these are, if you were to go out to the higher time frame, bonds are still beaten down and yields are still just sky high. So these two need to flip around nice and easy. US dollar China retesting some highs. We did get that breakout and sell off. Now we're trying to do it again. I'm using US dollar China because yesterday US dollar Japan was like a chewed up piece of bubble gum, just this wadded mess of candles with nothing really decent to read out of it, right? When it was basically looking like that, but there's nothing, there's no value in looking at that. We weren't going anywhere, weren't doing anything. So I swapped over to US dollar China, but we see this move in Japan this morning up into that 149.25 area. So it's on watch. We need to see these things calm down. Otherwise, the S&P is just going to go back down again, right? The NASDAQ's going to go back down again. All right, we had the VIX above 19 yesterday. We're selling off just a little bit today, but it's not giving much back. We've been in a pretty low volatility regime for a while. I don't think it's done. But volatility is funny. It can just deflate and fall right back down again, right? So parabolic moves in volatility is the norm, not the exception. So this thing can go from, you know, 18 to 36 or from 18 right back to $9. It doesn't have to grind its way down or trend. It could just spike and drop. It's the nature of the beast. So nice and easy, one step at a time. We need the Dixie to fade off. We want to see the 10-year break structure here and continue to move lower, nice and easy. And we already know that US dollar Japan isn't going to fade off of that high, but not climbing higher would be a good start. Also, when it comes to intervention, I'm not 100% sure on this statement, but I'm pretty sure that the interventions that we've had in US dollar Japan were on Fridays. Now, I'm talking about the big ones. Guess it's on a TV chart. Yeah, I have it around here somewhere. All these interventions, the January 2002, September 2022, August 1998. So if that's true, it's another reason to keep your eye on Friday, right? It's one more thing of concern. Amazon's the only one down this morning on this 8 grid of the fangs. Of course, Amazon has that news this morning too. An antitrust lawsuit. We could get a TRB in NVIDIA today. So when you got this nice little range like this, it's kind of like a micro bear pennant. Either way, it creates a wedge down here. We're IX10. So we get that breakout. It's a trend line breakover. We could get into, 440, 450 in a day. And I know that sounds extreme, but its average daily range is $14, about $14.50. Add another half, that's 15. Add another 8, that gets us into 23. So if we closed round number at 20, we could go to 43 really easy, right? That would be the normal move. That we're not even talking extremes yet about, well, what if it does more than the norm? If we wanted an extreme number, we would just double those, but even take 50% more than that. Plus the TRB setup, the reason that we like the setup so much anyways, is because it usually generates one of those big kind of candles. So keep your eye on NVIDIA today. If things do get bullish out there in the broader market, it won't just be this likely. Then we could easily get into that 440, 450. I'm not necessarily bullish on any name on here other than, the relief bounce kind of push to the upside that we're already talking about anyways. Certainly nothing in Amazon. I think that lawsuit news today is just going to keep people at arm's length. Keep in mind though, that if a company gets a short report and it goes up anyways, if it gets analyst downgrades and it goes up anyways, or if it gets hit with a lawsuit and it goes up anyways, it's usually a ripper, right? So if it bucks the trend, or if it throws off the news and just does the opposite of what the news would make you think it was going to do, those are usually pretty strong follow-throughs. I'm not expecting to see it in Amazon, but it's worth noting in case we do start to turn around, because it's not down by much. We closed at 125.98, so we could just say 126. And this morning it's at 125.60. So, it's down 40 cents. That's nothing. If the news was so bad, we would have expected it to be down more. It's also worth noting that every one of these names has a market maker move this morning. Remember, we get a market maker move when there's trading in the front end of the options. And there's only two reasons to go trading into the front end of the options for size, right? When an institution and firms are in there trading in the front end, they're either speculating with size, or they're doing a short duration hedge, just something for a few days, like a just in case kind of thing. So seeing all those market maker moves kind of makes me wonder if we're going to get a 1 or a 2-day kind of relief rally bounce. It would make sense, right? It wouldn't have any impact on the broader, bigger picture. You know, it's not like we're saying the S&P is going to go back up like SPY at 450, but after such a drop on the week, it would make sense if they get a few days of a push. The thing is, we're talking as if we know that it's calls, but we don't. I haven't looked, so I don't know. It wasn't calls yesterday, it was puts looking at SPY. But it's not heavily offset to one side or the other. It's pretty close. So calls versus puts is kind of misleading. Firms will use puts to go long and use calls to go short, or they'll use puts believing that we won't go down more, right? Because they'll sell puts and they'll sell calls. So just seeing the number of calls versus puts, that's not enough. We want to see, were they hitting at the bid and below or at the ask and above? Because that shows their intent, right? So with the calls at the bid and below at 46, normally the number would be offset more. We would see, 30 for one of these numbers and say 10 for the other, and would be able to say, oh, they were, heavily selling. But at the bid and below and at the ask and above are so close together, there's no window there to kind of give us any edge on, well, what were they doing? Aggressively selling or aggressively buying? Because this is saying they were doing both. So we can break that down a little more and say, well, where were they doing their trading at? Because if it's in the money, it's basically like trading stock. And if it was out of the money, then they're trading the Greeks. So we can use delta for that. And it seems like most of it was out of the money. We can just put from 0 to 40 in play. That's 60% of all of the calls traded yesterday was below a 40 delta or at 40 and down. So out of the money calls, at the ask and above, and at the bid and below. So a little bit of a mixed data pack there. This is where, having a program like Cheddar Flow and Whale Stream, Trading Ticks, black box stocks, something that can dig deeper into the options information that we have, right? Depending on the Discord that you're in, there's usually a Discord bot. Just use / and look at the bots in the Discord. You can get a lot of options flow for different, indexes and names, so that kind of dig a little deeper. This isn't a very clear picture. This is like muddy water. So that's what I've got for you guys. It's Bitcoin, pot stocks, and energy, and it looks like a relief bounce. We're not seeing any real aggressive, run it back up kind of behavior yet. Be careful, be safe, watch the news, keep your eye on the clock. I'll see y'all tomorrow.